Welcome to Digital Asset Degen. I'm Ryan. We're back. Wow, Bitcoin has been on an absolute tear. I don't know if you've been paying attention or asleep at the wheel. I was technically in a nap from about 54K and I woke up to 56 and a half. And right now, Bitcoin is actually sitting at $56,544. We have seen the better part in the last 24 hours of roughly about a 10% pump. Bitcoin was, oh wow, we're at 56.5. Now I will say on the title of this video, Bitcoin actually did crest up to 57K. This yellow line right here, let me go ahead and put my cursor here. That's 57. It looks like it wicked up to $57,220 before retracing a little bit back down to the 55 and a half level. Kind of unexpected. I mean, everybody knew it was pumping, but I didn't really expect it to keep going. You know, once we got to the 54 and a half level, I actually kind of figured, I was like, oh, we had a great pump. This is a good day. And I remember right before laying my head down, I was like, I wonder what the markets are going to look like later this evening as like Europe, Asia, and India come online. And man, we have seen like a crazy rip. I mean, that candle alone, that's the daily candle. You can see it. I'm not even kidding you when I tell you. Yesterday, well, it says February 28th there, but which is weird. Oh, I'm off the mark there. So we're in between Monday and Tuesday. So technically Monday the 24th, it was as low as 50,800. And so now we've hit 57.7 or 57.2, excuse me. So it's a solid 10% pump. I mean, that's kind of amazing. The volume here too, let's take a look at the volume. And yeah, you can see here the uptick in the green blob. And that's just money flow. And we all know, like, when you have a bunch of people buying, you know, things are going to go up. And when the money flow starts, like, for example, you can see how this big arc right here occurred as you see this big arc of money flow. And as the money flow peaked, it kind of crested up to here. And then we saw a little bit of a retracement. And the money and the price action like chopped a little bit sideways, but it was still going up. And then we see a little bit more of a healthier retracement. It's not. I don't know that I would call it a 45-degree angle. I would say it's on the better. It's on a decent retracement. It was a little bit more than a little bit deeper angle than what I felt like we needed. But let's just see where we are at with that guy. Yeah, so that's just a local that I was pulling there, and it took us a minute to get there until we got more money flow coming back in. You can see how the money flow just almost went negative, where if it crosses right below here, then the money flow actually turns red. Let me see if I can pull that up for you. Yeah, you can see inner ear itch. You'll have to excuse me for that. But you can definitely see right here that big, massive red blob. I mean, I know I use technical terms like blob and thingamajig. Not even sure where the origin of that one. I should probably look that up sometime. But I heard some people mentioning today this was all due to. Let me remove or actually reset the chart. I was hearing some people mention that this was due to some shorts or short squeeze, which is very possible. It could be a supply shock or a combination of both. But I will say that let's actually look this up here, because I actually don't believe that my indicator tells us how much volume was flowing. Yeah. Okay. Um, 24-hour trading volume of $15 billion, which is pretty strong. I mean, I don't know what the daily average is. But yeah, I mean, the whole crypto market, from what I saw, it looked like it went up. I think we were around 2 trillion. Yeah, the market cap went up 4% today. Because I thought when I was looking at it earlier, the market cap is right here. I thought that I saw it like right around 2 trillion, 65 billion or 60 billion, somewhere around in that range. It's been kind of hanging out in that area for the last couple of days, but we really saw some strong moves today. I mean, 5% in 24 hours. This shows 5% in 7 days, but obviously we just had a sideways chop mostly. And it looks like ETH hit 3172. I know ETH actually, I think it got pretty close to 3,200. I mean, that's only $30 away from where it is now. Let's pop that up. This will give us the body of the candles instead of where the wicks are generally for CoinGecko, just based on what I've seen and how they do it. Yeah, there's 32.39 or 32.39. I thought it hit 3,300 at one point. Maybe it was very close or wicked up, and yeah, that's 32.73 there. Let's take a look over here on TradingView. It's really kind of wild. I mean, this is my first experience coming into a halving in crypto. So, I think I've probably mentioned this before, but I got into crypto January of 2021, and so I didn't get to go through the bear market and see and feel what the pump feels like. I just got in at what the euphoric stage was, and it was a pretty crazy experience. I don't have the studio lights on today or anything, and the reason is because we're just focused on the green light over here. We're just trying to keep that trend going. But let's see here how high ETH made it today. Yeah, they're not showing that it went up very high either, or that it didn't hit 33. For some reason, maybe I just dreamt that. That's probably what it was. Right around there. It's 32.78. It's we're kind of right where we're at now. I just switched over to the 1 hour chart just to take a quick peek at it. I mean, at this point, this is all money flow, and I watch a couple of people, and there's a lot of people calling for a retracement, which now definitely seems like we should be getting one soon. How big the retracement is, I mean, that's up in the air. Shout out to Flex as always, my guy, my internet friend or friend. Super good dude. If you ever meet him, knows a lot about NFTs, and big thanks to you for helping me out. If you stumble into a stream again or ever check any of this out, I know I've been kind of absent when it comes to streaming in the last 2 months. I've really honestly focused on a lot, and actually had a family member pass away last night. I wasn't aware that was going to happen that quickly. I don't want to really go into detail other than it was my aunt, and she lost a battle with lung cancer. But I just I hope she's out there somewhere, shining down on the world. She's an awesome lady. But let's talk about crypto, because that's why we came here today. I really wanted to hop on and stream, and I honestly haven't had time to process that information that I just told you. But I just talked to my dad. It was his sister, and So my dad will be super thrilled to find out about what Bitcoin's been up to, since he's probably not been paying attention to anything else and is probably just going through the motions right now. And I feel for him and obviously his brother and his sister's family. So anyway, back to Bitcoin. Bitcoin is absolutely ripping. We're looking at the ETH chart right now on the daily. I mean, ETH is just a monster of these little tiny candles going up and up and up and up and up. And these candles they kind of look like they're getting a little bigger. And I'm not trying to say size matters, but it does. I have noticed that during the parabolic phases, you'll see these candles are in general larger candles than some of the small stair step candles that we get like this. Let's see what that move looks like here. Where's my measuring tool? Okay. So we'll just take it from, because this is I could take it from down here. I feel like that might be kind of cheating a little, but okay, toolbar, really? All right, we'll just do this. So that's a 50% move. Wow. So ETH since about a month ago, right around a month ago, ETH has moved roughly 50%. Let's see, right at 51%. Yeah. So we're definitely starting to see something different. I know in my last video, it was probably February 14th, a couple weeks ago. I keep saying that I'm going to be more frequent with my streams, but yet I've just not been recently. I've been more focused on my business and trying to, let me rephrase. I've been taking some time off because I know how crazy the bull run's going to get. And I know it's all work from here on out. And so coupled with trying to find a new job, 40-hour a week corporate job, making a run at the Web3 life, doing NFTs, streaming. I've really slacked on streaming. Lost one of my 10 subscribers, so I lost 10%. It's okay. It's fine. I probably wouldn't stay subscribed to a channel that rarely streams. Cheers to 57K. Hi, Chunk. My pup just decided to come in here, grace us with his presence. Hopefully he doesn't bark at everything in the world, because he is a hunting dog, but gets mistaken for a pit bull because he's gray all the time. But yeah, so the whole Bitcoin and crypto pump, it definitely looks like money flow is coming in first. No, you lay down. He's trying to talk to me right now. He does this when he wants to go out. No, you just went out, pup. New 9 spot Bitcoin ETF volumes reach new daily high as BTC nears 55K. I wonder if that's the reason that they're saying. It's entirely possible, but you couple that with any type of lack of Bitcoin on the exchanges, and then of course throw in some short squeezes. Even a little bit of short squeezes aren't going to hurt, because that means that if you don't know much about short squeezes, basically you're paying to do something called shorting, like a stock or a crypto, which means you're betting for it to go down. And so as it continues to go up, in theory, what you're supposed to do is buy a specific amount to cover how much you shorted. So let's say you wanted to short 1 Bitcoin. then you would essentially have to go out. If you didn't want to get liquidated, you would actually have to go out, cover your short by buying an entire Bitcoin, and then all is square rather than losing whatever you put in the middle. If I'm not mistaken, that's how it works with crypto. With shorting stocks, it's the same way, but just translate that over to shares. So if that isn't 100% accurate on crypto, please feel free to throw it in the comments and correct me. That I used to do some short squeezes and taught myself kind of how to identify that what was going on in the markets. And of course, you always identify it by the most, shorted stock list in the markets, and then you just kind of go from there and look at the numbers, find a catalyst. And it sounds simpler than it is, but once you kind of see how the puzzle is arranged, then it becomes very clear. And you can definitely make some good money on short squeezes, because that causes the price to go up because there's lower liquidity. More people have shorted the stock than what shares are out there. So you usually see a massive parabolic run, one big spike, and then it bounces up and down, doesn't usually reach an all-time high a second time. Once you do get that true parabolic peak. Let's check this out. I want to look at this article because this is something that I'm very curious about, like without having prepared for the stream today, or, I've got a bunch of people on some people's podcasts pull up there from probably the last couple of days. All right, so trading volumes for the new 9 spot Bitcoin exchange traded funds, or ETFs as we know them, have notched a new daily record as Bitcoin surged as high as 54,938 on Monday. And by the way, we're still on Monday. It's about 10:39 p.m. Eastern right now. This article was written 4 hours ago. So just in the last 4 hours, we've seen another, $2,100 or $2,300 in price fluctuation to the upside for Bitcoin. Trading volumes for 9 topped 2.4 billion, or for the 9 topped at 2.4 billion on February 26th, beat the prior record of 2.2 billion set on the first trading day of January 11th. That, for me personally, that would indicate that people are starting to get a little bit more FOMO. According to data shared by Bloomberg, Eric Balchunas. So that's where the 2.2 billion came from, and reaching an all-time high. The figure on both days excluded volume from Grayscale's converted Bitcoin ETF product, GBTC. BlackRock's IBIT took in the most volume on February 26 with 1.29 billion, setting its own daily record by about 30%, while Fidelity's FBTC came in second at 576 million. I mean, that's only a billy here, a couple hundred milli there. I mean, it all adds up, right? Flows from the ARK21 shares, ARKB and Bitwise BITB. Those ETFs tally 276 million and 81 million respectively. So, I mean, we're seeing multiple billions of inflows. I mean, this is just kind of crazy. And one other thing that's interesting to me is if they're actually going at, let's actually read the rest of the article and I'll go into my thought process there. Balchunas said he wasn't totally sure where the new interest came from, but noted volumes tend to be heightened on the first day of the trading week. Makes sense. You've had time to see Bitcoin rip over the weekend, or you decide to get FOMO because your brother, your sister, your cab driver, your neighbor, I mean, the guy at the candy shop decides to tell you, oh my gosh, have you heard about this Bitcoin thing? It's skyrocketing. It's amazing. We should all get a piece. So James Seyffart noted February 26 was the second largest trading day at 3.2 billion when flows from Grayscale, including flows from Grayscale. Earlier the trading day, when IBIT surpassed the 1 billion milestone, Balchunas noted that IBIT had taken the 11th largest volume among all ETFs. Insane number of newbie ETF, especially with 10 competitors. 1 billion day is big boy level volume, enough for even big institutional consideration. You have to excuse me, my brain is still not awake yet, and I'm doing it justice by having something cold and refreshing to drink. And you can obviously tell I'm getting over being sick recently. Meanwhile, Bitcoin's price spiked as high as $54,938 on February 26th, marking a 2-year all-time high, though it's still shy of Bitcoin's all-time high of $69,044. And that was on November 10th of 2021. So that just tells you right there, folks, and this is not tried and true, and you never know. We could always see that magical word called the super cycle, where it just keeps going up and up and up and up and up. Well, the only thing I have to say about that is that's always possible. But with human nature, people always take profits. People always want to sell. And it's not always going to just go up. There's going to be some sort of retracement. So be careful if you buy into that super cycle narrative. The only reason I say that is because the stock market in general it's been around for over 100 years now. We have seen consistent patterns out of that. They're not always identical. But you should just be aware of that. So just be careful, but I will caution everybody by the time, and who knows if this is the parabolic run up that we're getting and it doesn't continue into 2025. If there's a recession that's called for any time in 2024, or let's just say even in 2025 after the elections are over and the new president takes over, if we do get a new president, hypothetically speaking, again, this isn't a political channel. I don't really like to talk about politics that much. I will mention some stuff here and there, but I'll just tell you I don't have a political affiliation outside of like, if there's something that needs to be changed, we need to change it. We need to make the system better in general. And we need to change specific things about, who has what legalities in office versus general citizens. Okay. So enough about that, but data flows haven't come in. Let's see. While flow data hasn't come in for February 26th, over 583 million flowed into spot Bitcoin ETFs and 4-day trading week last week, according to BitMEX research. Okay, that sentence was really butchered just in the way that it was written. Apologies to the author. But a net outflow of 35 million was recorded on February 21st, which marked the first day without inflows since January 25th, which is fine. I mean, if you think about it, with the amount of money that flowed in today and there's a $35 million outflow, that's like peanuts. I mean, if you have $1 billion inflowing, just $1 billion in one day, 35 million is literally nothing. That's so little. It's kind of laughable, I guess. Year-to-date inflows have now exceeded $5.5 billion. And that's got to cause, and I'll just say this, the largest inflows are IBIT, FBTC, ARKB, and BitB. That's 5.9 billion, 4 billion, 1.4 billion, and 1 billion respectively, while GBDC has seen outflows of 7.4 billion. So really, GBTC selling off all their Bitcoin has basically kind of balanced the market out, or at least kept it lower than where it should be. But there is volatility because there's shares that are, or I shouldn't say shares, but there's Bitcoin changing hands, which you do have to have a buying and selling, and you would need more buyers during that buying and selling to really create a faster move upward. That's just kind of how it works based on my experience and my, elementary understanding of it. But you can't just buy and hold. You can buy and hold, but like, for example, in the AMC short squeeze, a lot of people bought and held, and there was a very small pool of shares that were available for the institutions to buy and cover their shorts with. So that was part of the reason for the parabolic run up, because of that. Now with Bitcoin, there's a ton of people that probably 60-70% of people have held Bitcoin for more than a year now. Those are not hard figures, so please don't hold my feet to the fire, but it's definitely up there. Excuse me. And that doesn't include, obviously, that data is not including like some of the institutions that came in, but when we look at it, that's 6 billion plus 4, that's 10 billion. That's 11.4 billion, 12.4 billion inflows, while 7.4 billion outflows from GBDC. So, we've really seen it net positive 5 billion essentially of inflows for BTC just this year. At the end of the day, I mean, that kind of volume is very crazy. I think these moves definitely, they have to have something to, my guess is it's definitely not only related to the smaller amount of Bitcoin on the exchanges, it's definitely related to some of the short squeezes that are taking place. But I don't necessarily know there's a ton of people that are like jumping into shorts. I would say it's a lot smaller pool of people than what we've seen in the past. And that's not me even looking at the data. But I just feel like I know there's a lot of people out. And here's my rationale for that, because usually people become more bullish in the bull. And we're kind of there, or at least generally during the halving year. You either see a ramp up and a ramp down a little bit into the halving, and or you see that the dip happen after the halving. I want to change this chart back to BTC because that's really the star of the show tonight. I wish I wasn't so snotty, nasally, but it's life. You got to struggle up, struggle on. Okay. Oh, here's something fun that we talked about the last time I streamed, which is probably 2 weeks ago. Because it was February 14th. And my verbiage here is red dot. And let me actually blow this up a little bit, make it easier to see. And what's funny is, like, in a bull market, you're probably going to see stuff like this. So right here, you can see I drew a vertical line right there. That vertical line right there is basically the day. So where I type the words out. So a red dot should print once VWAP crosses. Well, if we go straight down here, the VWAP started to curve and arc this way, which normally you would think it would probably run. And let me just draw the line here. You see the VWAP, how it curves down like that. Normally when we see something like that, we would expect it to make a little bit more of a U shape, but then it dipped and the VWAP went down. And that's where VWAP below zero, back up if money flow is not trending down. Well, the money flow right here was trending up as the VWAP was trending down, and it had more of an inside curve here is what I'll call it. Because if it's curving to the outside, or if it's curving, however you want to call it, but I know it's referred to as inside and outside. It's kind of curving back to the inside. If it were curving, this way, then I would say it's curving to the outside, maybe. We'll call it that. I can't remember. CF actually discusses that in his videos, the way he talks about the VWAP curving. But anyway, it's CF. This is his indicator, Market Cipher B. I'm not an affiliate. I'm just super jazzed because I like the indicator a lot. Puts it in a visual format for me so I can see it a little easier. But you can see here, like, I wasn't wrong, by the predictive indicator and what I was seeing. Red dot should print once the VWAP crosses the zero. The red dot actually printed once the VWAP did curve below the zero line. You can see that right there. You can see the VWAP curved right there, and that is the daily chart on February, we'll call it 16th. Because it really hadn't crossed the zero line on the 15th, and that's February 16th, 2024. So when we're looking at this from a standpoint of being a predictive indicator, yes, that's 100% true. That's what it is. But you also have to take into consideration, if you're not reading into everything and you're not expecting things to potentially turn around, like the money flow did a whipsaw right here. So we saw this red dot print. We saw the market dip just a little bit, and you can see this right here. It didn't really, we didn't, people always, I've noticed that, like, everybody's happy that we pumped to like 52K. And then we have a short retracement of, like, right here is like 5%. And it dropped back to, what is that? 54, like high 49s. So it didn't drop a whole lot. I mean, 5%, is a good move for like a big move for a lot of stocks, but people that have been in crypto for a while, 5%, like, recently has become bigger in a day. Like 5-10% a day is bigger, but we've seen pretty big moves in the past. I'll say that much. Anywho, so I just wanted to show that, when I talked about the red dot being printed once it crosses the VWAP, it's kind of like an if-then statement. So if we continue to see the money flow go down, the red and the VWAP goes below the zero, then we should definitely see a red dot printed and expect the price to go down some degree, some amount, not necessarily a huge amount, but you just never know until, things start to progress further down the line. And it looks like we're kind of retracing back to 56,000 right now, which is to be expected. I don't necessarily know. I kind of question whether or not we're going to drop back to 55. Let me see if I can pull up a Fibonacci. Okay. So the golden pocket is right around 51.3 is what we were talking about before. And this is not using support levels. It's just using that where I pulled the fib at. Let me see here if I actually had that nailed perfectly. I don't think it was. That's a little tighter. All right, so right now, do you notice that like we bounced right off of the 786? I mean, almost like this is the 786. If I pulled that fib perfectly, I mean, you can see this yellow line right here. This is what's really entertaining for me. The yellow line that I just circled right there, that is, I almost not even kidding you. You can see how my dotted line, I put it right there, and the dotted line is just a hair above that yellow line. And the 786 is going to serve as support and resistance based on the Fibonacci sequence or Fibonacci retracement. So, these are pretty big lines, these lines in the sand, I'll say, to some degree. And you have to keep in mind too, we had some local tops, or I shouldn't say local tops, but cycle tops right around in here. This was definitely an area that, this is definitely one of those areas where you do want to pay attention. And the only reason I say that is because it's just support and resistance based on, what we're seeing here. So we'll just pull these guys up here real quick. I mean, we'll just do it from that top, cover those two. So you are seeing, 1, 2 candles, 3, 4 that kind of pierce through the resistance, 5, 6, 7, 8. And this isn't really the best line because I'm not aligning it like perfectly with, like if I line it up here just above that, that would only touch 2 of the wicks. So I figured I'd touch like 4, 5, 6 of them, just to make sure that we were getting kind of a general idea of the resistance line that we're at right now. And that's at the 58,000 level. Which really 57 is the 786. That's where that is. And so, if we were to lower that down just a hair to the 786, I mean, you could still make the same argument. Like wherever you place this, like I always like to try to put it at the top of several wicks that form a specific line. But there's going to be people that do it a little bit differently, I think. But there is going to be some general consensus on, is that a good line in the sand or trend line? And the only reason I moved it down a little bit is so it would match the 786. I would probably personally put it, right there, that first big wick up. And then, it catches and it serves as a little bit of support and resistance as we crest over the top here. Now that's not super technical talk because we're not super technical here. We're not the biggest nerds on the planet, but we are just, figuring out the whole technical analysis piece. And I get it to a certain degree. I'm not a master. I'll never pass myself off as that. By the way, this show is for informational purposes only. Financial advice is not given on this channel. If you need financial advice, seek a financial advisor or a licensed professional. Again, you saw the disclaimer in the beginning, so just remember, this is all for fun and games and entertainment. If you really want to make money trading, you need to go figure out how to trade. Don't come on this channel and say, oh, wow, man, that's a cool indicator. Let me go buy it. Well, I mean, you should if you like it and you think it's cool and the way to look at it. And then you can use that in conjunction with support and resistance. But I would highly suggest, learning how to trade, take your time with it. You don't need tens of thousands of dollars to be a trader. If you're trading crypto, you can start with $100, $50, $20, whatever. I'm not advocating that anybody does any trading either. I'm not that great, especially with leverage trading. Now, spot trading and writing the trends, that's an entirely different story. So, again, just watch your P's and Q's, and I'm going to have a sip of my pee. which is actually a pint. That's what quarts, and it says when you hear the phrase "mind your P's and Q's," it really means mind your pints and quarts. It means don't drink too much. Hopefully you couldn't hear me swallow that. It's always a cringe sound when I hear somebody do that on their podcast. So we are retracing a little bit harder now, back to 55,750. So the 786 has definitely been, it's definitely now a source of resistance. We busted through the 0.65 and the 618, which is the golden pocket from the actual all-time high. So if we hold that golden pocket, we'll be in a good spot. And we also need to pay particular attention to, to the volume here on the right-hand side. Because now that we've gotten above these bigger chunks, there's less resistance, meaning there's less sellers. Ugh, gosh, I've been fasting for a day, so my body always reacts weirdly whenever I drink beer or something like that, or something carbonated afterwards. Not that I'm drinking beer, because that's clearly applesauce, juice, whatever. Okay. But yeah, if we see this area right here, it just becomes a lot smaller. So this big wedge right here, as it gets smaller and smaller and smaller, that means the more people that either are more people that are bullish and that are buying will shoot the price up faster and harder to the upside. And the reason is because if people are selling and there's more buyers and sellers down here, then that means you're going to have more of a stability point. It's almost like standing on the edge of a cliff. Not that I would recommend that for anybody, but that's kind of what we're discussing here. So Bitcoin pumped to 57.2 today. Everybody's super jazzed. It's now retracing a little bit. Let's take a look at the 1 hour. I do not know what's going on outside, but hey, come here. That might be coyotes getting a dog. Some of our neighbors, weirdly enough, despite there being coyotes and foxes out here, and coyotes travel in packs sometimes, they'll still let their dogs out at night and off leash, which, doesn't bother me. It's just like, I would never let my dog out. I've actually run into a very, very, in my dad's house, he lives in a little bit more rural area, I'll say. A little bit more, sort of. But he has coyotes that twice a year will tear up like a rabbit or something and leave pieces of it on his porch, like front or back porch. I've seen it personally a couple times. It's pretty wild. But those animals do not play around. Anywho, enough about me and my dad's coyote problem and the potential coyote problem here. It was either one of the neighbors had their dog off leash and it got attacked by another off dog leash, or maybe it was a coyote or something, but it did not sound good. I'll say that much. Definitely sounded like some distress. So, yeah. Okay. Back to crypto. I mean, let's just Google this. Like I said, this is a totally impromptu stream. Why did Bitcoin pump today? And I bet it's going to be the inflows. I would almost guarantee it. Let's see what they say. How much is Bitcoin going to be worth in 2030? So 2029, they're saying that it's going to be roughly 472,000 at a minimum and 485 at a maximum. And then 2030, they're saying 690,000 to 712,000. 2031, $1 million per coin, roughly. And then 2032, they're predicting $1.5 million. That'll be interesting to see how that plays out, especially if, who knows, maybe 2029 becomes a super cycle. I question some of these numbers. I'm not saying that it's not possible. I think it's entirely possible, especially with what we're seeing now and how early the cycle is playing out. But I did want to talk about, an early cycle versus a normalized cycle. I don't this is something that I'm now going to have to try to figure out, because what do you do? How do you know when to take profits now? if like this might be just a massive run into the 2025 bull run, or this might be our cycle is starting early and it's going to finish early. But who knows if that's the case? The real question is, are you willing to gamble your money and not like it's selling early or selling on time versus waiting until the first, second, or third quarter? Because in years past, Bitcoin has always mooned around November, December every 4 years. And now we're at a point where we're seeing Bitcoin really do some spectacular things. My last video, I talked about, some of the all-time highs, or at least, as before the halving, did it reach all-time highs or how close did it get? I'm now starting to see more people do that. I guess, maybe it just was one of those things that I thought about it on the spur of the moment. It wasn't like a planned thing. I didn't even name the video, but after that, but it's good that there are other people out there with bigger channels that are starting to take notice to that idea. I'm not saying that I said it before everybody else, but it was just something that I recognized today. I'm just like, oh, people are actually talking about this now. Okay. So it's not just me being a little bit newer to the market and seeing that. This is just really crazy. The real question is now, does it retrace back to the low 50s? Can it hold its ground? And a lot of this is going to be depending on money flow. And the reason I just pulled it over here is there's a camera that blocks part of my screen. So that's the 1 hour chart. I just want to look at this really quick. And I know this is a fib retracement that I'm using just to draw this here. So if this even like works accurately, like I don't think this is going to be correct because I'm using it as let me see if this other one, hang on. Oh, long position. Yeah. Okay. Remove drawings. Okay, that's not what I thought it was going to be. I never play around with that, to be brutally honest with you. Short position, long position. Yeah. Okay. I'm not going to fool around and waste your time with that. So we can definitely see here. Let me actually change optimal sensitivity on Lux Algo. You can definitely see we're in an uptrend. I mean, the candles are screaming that. All right, so we got to change this to 11. So this is the signal sensitivity and this is the optimal sensitivity. So that's basically the same thing. We're just changing that so they match. And then this might shift these little green and red doodads. If it doesn't, that just means it was close enough. But you can see here, if you use just the buy signal on Lux Algo, you'd have bought Bitcoin at 51,000. And we haven't had a trend reversal yet, so to speak. You can see this green line right here. You can see it was red right here, and then it turned green. And then we had a couple buy and sell signals, and then we had a big buy sell signal here. I mean, you can't really say it's a big one because it doesn't really distinguish it outside of the plus. So that would be a strong buy signal there. But when you see this, if you see a VWAP that's starting to move upwards like this, one of the things, this is another thing, this is an inward, upward VWAP movement. And so that's actually very, very good for price action going up just on the short term. Now, if you couple that with a money flow that's really starting to pump, then that's where you're going to see some bigger moves. But you have to have the money flow and the VWAP both going up at the same time. And of course, you're going to see the momentum wave, which are the very light blue and the blue wave start to follow those two trends. So really, you see the money flow start to come up as the VWAP's coming up from the bottom here, this yellow blob. As that's coming up, as soon as that hits the zero line, the green dot has printed down here at the bottom, which is definitely a positive, and that's starting to cross over the zero line. Then you've got your RSIs here in the 80s, 90s, high 80s, I should say, and then it is starting to come down a little bit, which is to be expected because we just pumped 9% in the last 30 hours, whatever it is. So we're really starting to see some strong movements out of Bitcoin. And my one question that I was going to get to just a few seconds ago, I totally did not get a chance to say it, but really I do wonder, the ETFs that are being, like the Bitcoin that's being bought for these ETFs, how much of that is supply shock? Is it expected supply shock? Meaning, is the halving already being built in? Or is it more along the lines of a supply shock that we're seeing now due to more people buying into the ETFs? I mean, I think that the retail's not really in it yet. I think obviously a lot of this was caused by the ETF inflows today. And maybe some short squeezes mixed in there, a little dash, little dab, whatever. I'm not going to pour through the numbers, but that's just a basic guesstimation. But you also have to take into consideration too, as people are buying into these, or I should say, as the institutions are buying, they do have to keep a 1-to-1 ratio, right? So as they're doing that, I mean, this is noon today. So we were seeing pumps from 10 a.m. today all the way up to now. This is the hourly chart. So that's like 10 green candles basically in a row. But my question is like, if they're truly buying these Bitcoin over the counter, which means it does not affect the price, then this has to be, in my humble opinion, in which I've not actually looked this information up, so please feel free to hold my feet to the fire and correct me, but don't actually burn my feet. But I got to believe that's a supply shock. I don't know what else it would be, because, as the scarcity gets less on an exchange, people continue to raise the price higher before they're going to sell into the buyers. So as these prices keep going up, it's at 52 right now. Well, I'll put my sell point at 54 and just make a little chunk. Then that just means as the people buy up the 52s, 53s, then it gets to the 54 and buys up your order. And then if there's no Bitcoin that's for sale below that, then that means you got to step up to above that to buy some more Bitcoin for, your ETF or whatever purposes. So that's a little bit of basic education on how some things work, just in an understanding. And, when we're looking at the Bitcoin chart here, I mean, right now, right here at this 56,388, that's a little bit of a ceiling here. Which is very close to that 57 mark that we hit, which was the 786. So, these levels where you see this, let me actually double check that I'm reading that volume bar correctly. It's the VRVP. And let me look at the style. I think that's where we want to, the up volume is the white, and the down volume is the gray. So that just means there's more buyers than there are sellers. So if you have more buyers, that means that the lower the price of Bitcoin, that's going to get gobbled up first, and it's going to continue to run up as far as price being purchased, or Bitcoin being purchased at a higher price, I should say. Hopefully that makes a little bit of sense. But just remember, white is up and the gray is down, and we have that. I should just automatically know this because my bars down here for volume are colored the same way. So let's actually change the volume bars to be a little closer to that. Okay, why is there... Let me see. Oh, that's why. So we'll do that. And we'll do this. There we go. That'll give us... It won't be so... It'll be clear there, so you can see that. Okay, perfect. So here are the indicators. VRVP, which is the stuff on the right side here. I almost said white side. That's hilarious. Market Cipher DBSI, which, if you notice, there's numbers above and below here. And then you've got a bunch of these little tiny diamonds and signals. That's part of Market Cipher DBSI. which is dual band strength index. Lux Algo is the reason that candles are colored red, purple, and green. And then on the exterior of the candles, for example, on the purple ones is where I've noticed it. Only on the purple ones that I've noticed. The exterior of the candles on the purple, actually right there on the red candle, you see a red candle that has a green line around it. It's super hard to see. Let me see if I can zoom in. Because this is not, I've never really noticed as much. I haven't really paid attention to the red candles and green candles to see if they're wicks, and the little box surrounding it. Like this, these are the two candles here that I'm focused on. Because on these two red candles that I circled, the exterior of them is green. And as those red candles start to move up, we transition into purple. So that means that it's transitioning from a downward move into more of an upward move. And those purple candles have a green box around them, and the wicks are green. If those candles had a red wick around them, as far as being purple, then that would signify that it's a little bit more choppy, potentially to the downside. Now, I say the word choppy, meaning purple usually is kind of a little bit more indecisive move for Bitcoin, but they do identify the trend based on the wick and the exterior of the purple boxes and red boxes and green boxes. And then you can see here is a great example of a couple of green candles. I'll circle them to make it easier, but just to help you guys see this, those green candles right there, they're all green, but they have a red wick, and the red box around the candle, the body of the candle, is tougher to see, but you can just see that those are red there. So I just wanted to share that with you because it may not be super visible whenever I'm talking about this on screen. But anyway, that's neither here nor there, or it might be there and here. Who knows? Okay. So, yeah. So I guess my whole point was that I was getting at is I'm highly suspecting that the inflows of all the BTC definitely had something to do with the price. And if you have $5 billion in a day or even a week, that's going to significantly drive the price up, and it's going to reduce the amount of Bitcoin on exchanges. Now, the real question is, do we see this every time do we see the price action move this hard just from major ETF interest or positive buying experiences is what we'll say. And who knows, until we get there again, we may not know. Now I would say it's more likely than not that all this movement on the Bitcoin ETFs is just causing them to buy more, causing that supply shock. Also, as the price goes up, people are getting liquidated. Again, I think that there's a lot of people out there that are bearish. I'm trying to think of the person's name. There's a couple people out there that are calling for major retracements, and I'm not arguing at all because we really haven't had any major pullbacks for quite some time, or healthy retracements and pauses, we'll say. And there's I think it's Dr. Pump and Dump, or the doctor of Pump and Dump, I think maybe the correct name. Super knowledgeable guy, very technical, knows way more than I would ever imagine knowing about TA. I'm trying to catch up fast, but but the way that he's talking about the Elliott waves, we are kind of hitting that ceiling right now. And I don't normally always want to talk about somebody else's TA, but Flex turned me on to that guy, and Flex is definitely thinking that we're going to see a major retracement. There's major influencers all around that are thinking we're going to have a major retracement. I'm not really sure how we're not going to have a major retracement. I know that sounded funny how I worded it, but we haven't had a major retracement. I mean, right here at 39,000, let's take a look at that, because this is just really interesting. And I'm sorry to throw some names around on here. It's not for the purposes of calling anybody out or saying that they're right or wrong, because at any time these charts can change. I mean, I feel hella bullish, we'll say, Oh wait, that's the right tool. So let's just do from the wick here. That was right around 49,000 down to 38, which was a 22% downward movement. Not terrible. I mean, it's a lot less than what I thought we'd see by now. I figured, after we hit 31,000 and we retraced only to 20, right at 24, like high 24, that's a 20% retracement. That's not bad. I mean, that's a healthy retracement for what we're going through. And even it might be on the shorter side of healthy, meaning I would expect a 30% retracement after, we've gone from, what is it, 15. Well, I got the 15.8 right there, but we moved up 63% here. And then let's just see what the retracement was on that. And then we had a 20% retracement, a 22% retracement. So that's like, half the move almost, roughly. Or, well, a third of the move-ish, I guess. But anyway, so we have these little retracements. We have these big pumps, and you cannot see this because I still have it on my big self. Well, that sucks. I was literally trying to show you things on here, and we couldn't see them. Hopefully, I know I totally screwed that up when I was talking about the candles. I'm just scrubbing back through the video. Yeah, I totally screwed that up. I'll quickly go back into the candles just to show you. So right here on this, whoops. So right here in the center of the screen, you'll notice that, whoa, why is this thing all jacked up? All right, I'm canceling that right there. That's not what I wanted to. Okay, so the purple candles here in the middle, right there, you'll notice that they have the red boxes around them. So that's a downward trend movement. And then these two candles here that are both purple, they have the green boxes around them, which they are actually moving upward, right? So that's what I was getting at. And then over here, you'll notice we've got a couple of candles that have the green exterior. Again, it's super tough to see unless, you blow up the screen and I make the candles really super huge, but you'll see that you've got the green boxes here on the exterior. That just shows that these candles are getting bigger. And then, of course, you see red candles with a red exterior, red wick. That means that those candles are generally trending downward. Here's three green exterior, red candles with green wicks, and going into a purple candle with a green wick and green box around it. And then you get a doji that's literally it looks like Darth Maul's lightsaber. It's got a purple center with red wicks on either side. So that just kind of tells you that it could be trending downward, right? So you just have like kind of this main momentum, and then you have a secondary, whatever color the wicks on the body of the candle's box is. That kind of gives you an indication of where everything's going. So that's how I use Lux Algo with the colored bars, or candles, I should say. I know, super technical here, totally kidding. But what I was driving at too was that Dr. Pump and Dump, he was talking about this being the very last wave in the Elliott wave, meaning, if I remember correctly, he talked about it going through 53,000, somewhere around in that area, which we did punch through 53, and we're sitting at 55,886 right now, so $55,800. Now, it may take a little bit of time for this to play out. Hopefully, we'll get a little bit of a retracement downward, and instead of just continuing to go up. So if we see a retracement like this, that's going to be a super healthy bear flag or bull flag. But if we see a trend line that's, let's just say, well, that's going to make me create another line. But if we get another retracement that's more like this, and it's kind of mimicking how fast it went up, then we know it's probably coming back down, to the mid to high 40s would be my guess. But also, you should be aware that when you're looking at Elliott waves, it could potentially go down here. And I say it's for me personally, if the Elliott wave plays out and there's no real catalyst other than the Elliott wave, and maybe we need a catalyst for that to play out, like the Fed cutting rates or whatever have you. Totally get it. No question about it. There is always a possibility of anything happening, especially with crypto. And most people that are buying ETFs, it's widely believed they're just going to hang on to it and they're not going to sell. And we don't know that until we get there, because we haven't seen a 60 or 70% retracement with ETFs to see what the buyers' reactions are going to be. Because if it gets kind of nutty, I mean, it could be one of those situations where it's like a blow off top from all the ETF and FOMO from those people buying in. And then once it gets to a certain point and it starts to come back, then that could initiate a sell-off. And for me, I'm kind of on the fence. Logically, my mind tells me, okay, this makes sense. The Elliott wave setup, the fact that we've absolutely ripped, we've had some retracement right around, some support levels that have built, here at the, 22 level. And then we had two different levels at like mid 20s, right around in this area here, and then this area here. And then we had a little bit of support right around 43,000, and now we've punched up into the mid 50s. So, so far we've seen pretty healthy, moves up and retracements. It hasn't just been like big candles for like days on end. And I think that we'll probably see those in the actual parabolic bull run. That's just what I call it. Most people expect it to be in 2025. Some people are even calling for late 2024. So, when we start seeing the candles get larger as you're going parabolic, you'll notice that whenever you look at charts, I think we did that before in the past, but you'll notice that these things get a lot bigger. Like you see how they go from really super small here, and then they just have these big, massive moves up. And then you have like a wick that goes all the way up here. Let me pull a little bit of a doodad here. It goes from 41. I think I mispulled that, but that's fine. 41.9, and it retraced all the way, from that wick to the next body, the next candle to 33. So you're talking, $10,000-$15,000 swings in the price of Bitcoin. We'll see that probably again. And you can see how they just stair step, and then the parabolic. You can see the volume candles down here are really, really big. But you just see the size of these candles. They're just pump, 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 pump. This is probably where people are pulling profits and rolling them into altcoins. I'm actually very, very cautious about switching from Bitcoin to altcoins. I'm actually just mostly in alts right now. I don't actually own any BTC right now, to be brutally honest with you. If you want to know the truth, I sold it to dump it into alts to get a higher return. And the funny thing is Bitcoin has outperformed my alts to this point. Bitcoin's at like a 300% gain for the year, or since the bottom of 15.5. So it's 47. So yeah, it's got to be at 350% or something crazy like that by now. Let's actually pull that measure move. But yeah, so the point of what I'm getting at is that just further backs up the theory that Bitcoin does outperform going into the halving year. See, that says 276%. Oh, I guess that does make sense. I'm a little bit off on my math there, because if it moved from 15.5 to 31,000, that would be 100% move. And then from 30,000 to 45.1, from 31,000 plus 15.5 would be 46.5. That would be 200%. And so as we get closer to the 60, 61 mark, is right around the area, you'll see a 300% total gain. Since the bottom, which was right around, I think it was November. Yeah, November through January 1, or end of December in 2022. Interesting thing we've got going on here. Again, this is something that we talked about in the last episode or last stream, but we're definitely starting to see the price movement. Things are very much going in the right direction for what we're looking for. Hopefully you enjoy the show and had a good time with it. Let's see here. Yeah. So let's just pull up a couple quick things. I just want to pop in and see what the big gainers are today. Let's take a quick look here, pals. I just wanted to look at the 24-hour volumes. Yeah, 40 theta moved 43%. Everything went parabolic, really. I mean, for the most part. I mean, Bitcoin Cash is even up there. Wow, that's crazy. It pains me, but it is what it is. Near broke $4 today. I think even HBAR blew through. It went into the 11-cent arena again, I believe, because I believe it hit 11 cents and then dropped back. All right. So let's see the losers. Yeah, WorldCoin's on the downswing. The graph dipped a little bit. That's kind of interesting. Yeah. All right. So I think also, yeah, on the 7-day, Theta's up 73%. Flare is up 50% of all things. That's an airdrop token from XRP, if I remember correctly. I think I've got like 100 Flare actually that I need to do something with. What's the actual price on that? 5 cents. Oh, okay, that's not even really worth probably moving around. Yeah, Flow hit over $1.07 now. I'm wanting to see some of these coins that had good runs last time. Like Flow hit like, I think it was like $40 last year or last bull run. I think Near has a possibility of potentially hitting $30-$40. That's widely speculated. Like, I mean, if you did a 5x from here, that'd be $20. Like if you bought Near around $1, that's a solid 15 to 20x, assuming that you could sell the top. But yeah, so we're starting to see some really strong moves. This is kind of a beautiful thing, going into the halving. The real question is are we actually going to see? Are we going to see a major retracement? And that's what everybody's really kind of wondering right now. That's like the big story with every influencer or people that talk about crypto. I think if you're not expecting it, you're gonna get surprised. I just don't see how you can go this parabolic without having a 30 to 40% retracement. I think a natural retracement, we're probably talking maybe lower 50s. If there's a catalyst that's mixed in there with, let's just say hypothetically, the Fed starts, chopping rates, which I don't know that they will yet. I think they're going to hold on for quite some time. Ultimately, it's just going to take time for this to work through the system. They want to see jobs reports, or if inflation cools on the core inflation, then I think they'll cut rates without jobs showing a negative symptom, even though from what I've been hearing from people that actually crawl through that data, those specific jobs numbers are not full-time positions. People are still laying off. The fact that, jobs are increasing doesn't really tell. I mean, for what I do for a living, for recruiting, helping people find jobs, it's a tough market. I've been looking for a new job for 10 months now. Well, technically just nine-ish. I got laid off in May of 2023. And, it's part of the reason I wanted to dive into, doing NFTs, seeing if I could start a business that might be able to help me stay afloat through the remainder of 2024 into 2025. Hopefully that would turn into something that might be able to just pay for my bills. And, if it were to grow into something, that would be amazing. I'm just kind of spitballing, telling you where my head's at with it. I enjoy making ETFs and creating concepts, and, I'll definitely be, hopefully by the end of this week, I'll be able to actually launch my first NFT collection. I have 5 already completed. I haven't generated them yet. I have the Photoshop files already ready to go. All I literally have to do is, go through my method of getting those images kicked out, and then we'll be good to go. But I also wanted to get an extra drive to keep a lot of this on, because it's definitely eating up some space on my computer. So, but yeah, so we're starting to see things really move. I know there's a lot of people out there, if you're not fully in the market, be patient, we just don't know if it's going to really retrace, because you can't really always say that it will, but yet logic would tell you it's crazy to think that we're not going to have some sort of major retracement. So you're going to need catalysts out. Like, I would guess that the Fed cuts rates pretty heavily in the third or fourth quarter. If they do that and inflation spikes, that's going to look terrible on our country. If they do that and the economy really starts to slow down and jobs numbers are looking terrible, that's also not going to look good. So there is this question of, how is the Fed really going to balance what's going on with the markets? Because, I'm hearing things that these new jobs reports that are coming out, most of them are part-time jobs. There are people having to work 2 jobs just to stay afloat during these time periods. It's not like this hasn't happened before, but when I was checking out some podcasts and people spit out some data, we've had more repossessions on cars now, and the last time they were this high was back in the early mid 90s. And credit card debt, as you all know probably by now, is at an all-time high. You're right now over $1 trillion. I hesitate to say 1.1 trillion or anything higher, just because I don't have that data on hand. But with the average credit card debt between like 5,000 and 8,000 per family, if you're barely making your minimum payments, it's just a huge strain. And so we're seeing those things, and we're seeing a lot of people out of work, but yet they're not filing unemployment. And I think that those people are actually going out and getting a secondary job. That's my guesstimation based on what I keep hearing from other individuals who pour through the data. I haven't pulled up the data for that stuff myself personally, outside of here and there. But let's actually do that. I'm going to do that for fun, since, this is probably just going to be me and myself streaming tonight. Jobs data today. Employment situation summary. All right. Let's see here. God, I look terrible. I feel terrible too. Okay, so among those not in the labor force who wanted a job, the number of people marginally attached to the labor force changed little at 1.7 million in January. These individuals were wanted and were available for work and had looked for a job sometime in the prior 12 months, but had not looked for work in the 4 weeks preceding the survey. Well, that would make sense, because usually December is a very slow time. Oh, and by the way, let me switch over to my other screen so you can see this. It's highlighted right here. And you can see up here, actually you can't. Let me pull this down. Okay, so that's BLS.gov, Board of Labor Statistics, or whatever the heck it stands for. So I just wanted to share with you what this says. So the economic employment changed little for 4.4 million. The labor force participation rate at 62.5% was unchanged in January. Unchanged in January. The long-term unemployment accounted for 20% of all unemployed people. A12 is a table, I guess, that they want us to check out. I find this really interesting. I think more people are just taking on multiple jobs. I really do. Because if you think about it, there's 60% of all people are living paycheck to paycheck. And when you start seeing, jobs are increased, you have to look at how many of the jobs are government jobs that are created. Let's actually look into that. So government employment continued to trend up in January, plus 36,000 jobs. below the average monthly gain of 57,000 in 2023. A job gain occurred in federal government, 11,000, and employment continued to trend up in local government, excluding education, which is plus 19,000. So here's the beautiful part about all this fun stuff is these numbers are just, I don't think they accurately really reflect what we're seeing in the markets. I think that there are people getting jobs. I just don't think that there's as many tech jobs. Like tech is not hiring like they were in years past. And obviously when everybody got laid off in 2020 to save money, then in 2021, there was a massive hiring phase. And then people were deleveraging the number of people that they had brought on. And tech companies will actually like hire people just to keep top talent away from other companies. So in 2022, when the market started to dip, that's when you started to see some layoffs in like September, roughly. I think October was a pretty down month as well. Just for the overall markets. But, now we're starting to see even more deleveraging, even though NVIDIA is really driving the market movements. Let me go into Yahoo here and see what they have. Okay. Social media laws. It's good to know that, our country's debt and fiscal responsibility is not in the forefront of the news. It's really about social media laws, which I will say I know nothing about those actual stories, but I know that a lot of people have been affected by social media and it's not always good. So, Expedia to cut 1,500 jobs globally. FAA closes investigation into SpaceX. Biden election odds are finally improving. That's interesting. I heard him say recently that I don't know, maybe this was AI. I almost don't even want to repeat it, but there was somebody that had posted a video where he was blaming Trump for the border problems. And like, to my knowledge, he was the one that opened the borders the way that, just letting a ton of people in here. I really hope that crime doesn't go up just in general, because like local Americans just, and this isn't politically motivated, but I really hope that families are not as affected as we think that they're going to be or already are. I mean, obviously we've seen reports of people being attacked in NYC. It is what it is. I'm not going to sit here and say that this is, I'm just, I'll just hold it there, because ultimately I want to make sure that the citizens of the United States are as safe as possible. If we're openly letting people into the border without like background checks and the proper, immigration, going through the motions of proper immigration, I think that can lead to some very dangerous situations, because there are very desperate people out there that do not value life in the way that most people, I would say, do. There's a point to where all human beings have this capability of fighting and doing anything that they can to get ahead in life. And if you come from a very brutal background where you haven't had a lot, you've had to scratch and crawl and fight and, let's just say work for specific entities that are brutal to human life, we'll say. I'm not going to go any further, just because that's not my domain. I know I'm very not knowledgeable, but my whole point in saying all that is really just, let's hope that this doesn't cause further chaos. And it hurts me to say that, like, I know that our Black communities, they're not getting the same support as the immigrants that are being let into the country. And, as much as I want to open the borders for anybody who wants to come into our country, because our country was founded on immigration, I also want to make sure that the people we're letting in the country are obviously going to be safe individuals, and we're not going to see any reactions or whatever else. And who knows what percentage of people coming across the border, who knows what that number looks like as far as violent offenders, et cetera. Right? I mean, I'm sure you could probably look up some statistics, basic general global numbers. I'm not going to bore you with that right now. I'm just kind of covering like my personal thoughts on it. Because I love to help people. Part of what I'm doing with NFTs here in the future is going to help people. and there's going to be I'll get to that once I launch everything. I actually need to get to work on my website. It's just going to be a one pager. I'm going to dox myself. I am going to actually have to pull down my personal website just because otherwise you'd have my personal information, and there's not any reason for anybody to have that outside of my, first and last name. But, you know, I wish I had enough money to be considered like super wealthy, or at least even moderately wealthy, or at least just not jobless and trying to make a Web3 life, because that would be a little bit more exciting, right? Anyway, sorry, I was just thinking about it. I was like, oh, well, I might be a target if I dox myself. And I'm like, yeah, but I don't have money, so it's fine. Okay, so the FAA closes investigation. Japan's inflation tops forecasts, boosts BOJ rate, hike bets. Okay, let's check this out. Japan's benchmark inflation topped estimates in January, supporting the case of the central bank to scrap its negative interest rate in the coming months. Wow, if they had a negative interest rate, that means inflation should be jumping through the roof, right? Because they're not slowing the economy, they're stimulating it. Bond yields jump after consumer prices, excluding fresh food, rose 2% from a year ago. In line with the Bank of Japan's inflation target, the 2-year note yield climbed to the highest level since 2011 after the data from the Internal Affairs Ministry Tuesday exceeded a consensus estimate of 1.9. So they're basically saying the Bank of Japan will end negative rate policy, or the BOJ, Bank of Japan, as early as March, and it'll serve as a selling catalyst for bonds. So that just means they're going to dump. Bonds are debt, and they're just going to be dumping them. Whose ever debt that actually is. The stickier than expected inflation data will sustain market speculation that the Bank of Japan is nearing its first interest rate hike since 2007. That's really interesting because they're in a recession right now. I've been hearing this recently. You know what? Let's... $2024. Let's see what this says. UK, Japan, Ireland, and Finland also went into technical recessions in the fourth quarter. Ireland registered a quarter-on-quarter GDP contraction of 0.7% and 1.9% in Q3 and Q4, respectively. Okay, so these countries have been in recessions, or at least Ireland has been in a recession for 2 quarters in a row after we look at the numbers. Is Germany in a recession? Its monthly report, the Bundesbank said stress factors would probably remain and that economic output could therefore decline again slightly in the first quarter of 2024. 2 negative quarters in a row put Germany into a so-called technical recession. Okay, so we're going. Here's what's interesting too. This is what we really you gotta like at least think about this from a rational standpoint. Okay, now the word recession is scary. I think the United States is already in a technical recession, but I think that Nvidia and the small number of tech companies are really upholding the United States' GDP, or gross domestic profit, right? So, or at least I should say the stock markets, and just in general. And when you have that happen, it's basically like you have some rich person come in and they're spending all this money and they're, juicing the economy. Well, what happens if Nvidia runs out of chips? What happens if the chip market slows down? And I'm only saying this because you just never know when that may happen. I mean, at this point right now, I gotta believe that with the dip in supply and chips being made coming from Taiwan, now Nvidia is obviously picking up the pace with it. I gotta believe we might experience some sort of a setback, just in terms of chips. I'm thinking that could be a thing, especially with AI, because there have been some reports that have come out recently where I think Mark Zuckerberg is going to buy a ton of AI machines, et cetera, from Nvidia, whatever. So the other thing too is as much as the world it caused an issue with Bitcoin in the previous bull market by saying that it uses too much electricity. Here's the funny thing. I just learned yesterday that every single, from what I learned, now I have to double check the model on it, but an NVIDIA AI like chip or machine, I'll have to double check which one it actually is. And when I say chip, it could be a chip that has like 24 cores or something like that, or 48 cores or whatever it is. I'll do the research on that and chat about that. But they basically said an NVIDIA machine uses as much electricity over the course of a year as a household. I don't know what size a household, but that doesn't really that tells me that there might be a little bit of an environmental issue there. I mean, if people are going to complain about Bitcoin and AI is widely used product, like I don't see how they can avoid that. You know, at what point are people going to say, well, wait a minute, let's hold up here on the AI because it's using so much electricity. It's 40,000 times more electricity than Bitcoin. There you go. And as AI and models start to need more computing power, we're going to need more electricity. And there you go. It becomes a vacuum, really, essentially, at that point, just as far as like how much electricity is being used. And then you also have to factor in that, you know, people are having to charge their cars. And we don't have an infrastructure right now that really supports that. I mean, there's not enough car chargers to actually charge the vehicles on the road. When people are having to wait for an hour or two, like that doesn't sound like a good time. I mean, don't get me wrong. I'm all for like saving the environment, but with what's going on right now, like our country's not upgrading our electrical grids to meet what I think is going to be a future demand issue. Or at least that's my understanding. Maybe I'm wrong. Maybe they are updating it, but they're not updating it in the way that they need to. But I think that there's going to be a huge gap in electricity that the countries around the world are going to need, especially if they're, you know, using big AI. Their, you know, electrical vehicles are being pushed out into the masses and they have these deadlines. You know, I think we could be in a really, really crazy spot there. Which makes me beg the question, like, is solar powered panels on your house, is that going to be a thing that is mandatory for all people in the future? Because that means that you're getting solar power from the sun and you're not pulling it from the electrical grid, which is probably going to, I mean, now is NVIDIA going to have to open up shop in a desert? And, you know, that's how they power all their chips. You know, it's a very valid question. Will it take years to play out? Probably. I don't know. Maybe it'll take a year. Maybe that'll be a huge question in the debates that, you know, the political debates that we see coming up this year. And if that's not part of it, then I seriously question why. You know, what is our country going to do to prepare for the growing usage of AI and the amount of electricity that it takes to power each AI machine? Or as these models require more and more power, like how do you address that? I mean, I would bet, I'm betting we might hear that come out, and we might hear some people stumble on those questions. It'll be interesting though, because, you know, I'm just kind of talking off the top of my head right now, because I think it's just kind of a thought that's formulating in my head. We're not really prepared for worldwide disasters. We're not really prepared for, you know, for the most part, like asteroids coming to hit the earth. We don't have enough funding to really cover all the asteroids, let's just say as like catastrophic events. Then you have sun's flares that can disrupt the, you know, electrical grids and how electronics function and stuff like that here locally, or I shouldn't say locally, but on the earth. You know, I just think that there's things that we're not prepared for, and it's like there's an example that somebody gave, and they weren't talking about the same subject, but if I remember correctly, like years ago, like 5, 10, 15 years ago, there were 2 factories that made IV bags. One, I think, was in Puerto Rico, and then one was at another place in the United States. And we weren't prepared for a hurricane to destroy the manufacturing plant down in, I think it was Puerto Rico. And we weren't prepared for that to happen and cut off 50% of the IV bags, or at least the production of them. And so it's like something like that. Like if you only have one area, if you have a water table, for example, that gets infected, or that gets tainted in some way, like how do you prepare for that? How do you try to clean that up? How do you get it back to a restorable area? And I just think these are things that we're not really thinking about as society, because it's like, well, it hasn't happened yet. Let's not worry about it till it does. And then once it happens, it's chaos. And I think that's probably just human nature. Like, let's not worry about anything until there's something to worry about. I just feel like that's a thing, and what's great is there's a lot of people out there that prepare for the worst and hope for the best. And I think that's one of the best mentalities for anybody to have out there, just to make sure you're covering yourself. You got to. Okay. All right. I think that's it. I've rambled enough, talked a wild amount about, a variety of different things. Hopefully you found the podcast or the stream enjoyable. I'm going to continue to, lazily put out new content. I'll just tell you, I'll come on here maybe once a week, once every couple of weeks, whatever it is, who knows? But ultimately I think that, I am going to get in more of a rhythm as we move down the line. Thank you, Ben's chair. I hope you're having a very calm night and not having to listen to a lot of dominance videos being made. Just kidding. I love Ben's videos. He's great. But yeah, so I guess at this point, I am going to increase that. I have been very lazy in my approach to streaming recently in the last couple of months. Outside of that, I am going to be hopefully getting the NFTs, at least one out of the first 5 minted this week. I still got to get a bank account set up and get that pushed through and make sure the Department of Revenue has my new stuff. Full length films. Yeah. Right. I tell you what, man, like the dominance videos are great. Like that taught me a lot about, the altcoins bleeding against Bitcoin and how people roll profits from one to the other, man. They're great though. 100%. Yeah, I gotta actually check out some of Ben's stuff too. I've kind of slacked on watching videos recently. I mean, I shouldn't say that because I watched NFA Live and his Bull Strength band thing this week earlier. But yeah, he's got great stuff, man. There's some really solid technicians out there, and I think it's pretty rad that he's like a physicist or a nuclear physicist. I think PhD, something like that. Anyway. So Ben's chair, I hope to see you in chat on some of Ben's streams in the future. And I also listen to like Sin City, Gareth Soloway, Doctor of Pump and Dump. There's a whole list of people, but love the community over on Ben's channel, and of course with Coin Bureau and Digital Asset News. You're on the Twitter too? Cool. I'll see if I can find you, man. Or chair. Sorry, I called you man. Technically you're a chair, so I don't want to make things weird by entitying you. I'm not even sure that's a real thing, but yeah, so we'll get the NFTs going hopefully this week. Fingers crossed on that. As long as I can fund the account, then I should be able to go ahead and pay for the minting. But I'm going to release different NFT versions or different collections on different chains just for funsies. I'll definitely release, through OpenSea. I'm going to be using Kabila for the Hedera network. OpenSea, I'll probably use Polygon just so it's super cheap. These are going to be super cheap NFTs, anywhere from $3 to $10 a piece. You'll see, and I'll explain later on videos and whatnot. But anywho, Ben's chair, I hope you have an awesome rest of your night. Thanks for at least coming out, and I appreciate the good job. I identify as an idiot sometimes, so I understand identifying as a chair. Sometimes I identify as a genius, but that's only when I'm right. So, but if you like the content, smash the like, subscribe, pass it along to your family and friends, and we'll catch you next time or soon. Take care. Bye.